All right, let's look at exercise 9.8. Ruby Corporation produces a single product. Each unit requires 5 square feet of product or material at an expected cost of $20 per square foot. During July, Ruby Corp purchased and used 15,000 square feet of materials and paid $337,500 for it to produce 2,900 units. Based on all of this information, they want us to calculate the price, the quantity, and therefore the total direct material variances. So I've reproduced the information from the question. So we have our standard material per unit. So this is how much material we expect to use per unit, which is 5 square feet per unit. The standard price per square foot, we expect to pay $20 per square foot. The actual quantity that we purchased and used was 15,000 square feet. The actual price per square foot, we calculated to be the 337,500 divided by the amount of square feet of material that we purchased. So our actual price per square foot is $22.50. And we produced 2,900 units based off of the material that we had purchased. So we have, and I'll just write here so this is a little clearer. One other variable we have to calculate for our variance analysis is that standard quantity that goes into our material quantity variance. Remember, what is the standard quantity? The standard quantity is the amount of material we would have expected to use at a volume of, in this case, 2,900 units. How we calculate that standard quantity, it's the standard material per unit, which is 5 square feet per unit, multiplied by the units produced, which in this case was 2,900 units. We multiply those two together, and you can see the formula there. We would have expected to use 14,500 square feet at this volume. So we'll get into that when we get to the quantity variance. But let's look at the price variance first. Remember, the price variance, it's the difference between the actual price that we paid per square foot, which was $22.50, less the amount that we would have expected to pay per square foot, which was $20, our standard price. So that difference of $2.50, we multiply that by the amount of materials that we actually purchased. In this case, 15,000 square feet. So you can see the formula there, the difference between the actual price and the standard price, and we multiply that difference by the actual quantity purchased. We get an unfavorable variance of $37,500. So what this means is because we paid an additional $2.50 per square foot that we weren't anticipating, our material costs increased by $37,500. That's why we've labeled this variance as unfavorable. Now, what about the quantity? The quantity variance is the difference between the amount of material we actually used versus the amount we should have used at this volume. So actual quantity used was given, that was 15,000 square feet. We subtract from it the standard quantity, so that's the amount of material we should have used at actual production level, which is with the 2,900 units. So we subtract from actual quantity used the 14,500 square feet. That's the standard quantity we just calculated. That difference we're going to multiply by the standard price per square foot of $20. So you can see the formula there. The actual quantity was 15,000. We subtract from it our standard quantity, which was 14,500 square feet. So we used 500 more square feet than we would have anticipated. Because we used more material than we should have based off of our estimates, we're going to have an unfavorable variance here. And those 500 square feet at $20 per square foot costs us an additional $10,000 in material costs. So because we used more material than anticipated, our material costs increased by $10,000 in this instance. And then finally, to calculate our total material variances, so how much did we deviate from what we expected to pay for material? That's the combination of our price variance and our quantity variance. In this case, because they are both unfavorable, you can simply add the two together to get the $47,500 of material variances. What this number says, again, remember what this number represents. This number represents the fact that we overspent on materials during this period by 47,500. Us doing all of this work up here lets us know what went into this overpayment. Well, we can see that of the 47,500, 37,500 can be attributed to the fact that we paid $2.50 more per unit of square foot than anticipated. Remember, the price variance, the actual price was $22.50 per square foot. We expected to only pay $20 per square foot. The other 10,000 of that total material variance can be attributed to the fact that we used 500 square feet more than anticipated at this volume. We actually used 15,000 square feet at a volume of 2,900 units. Based off of our estimate of how much material we would use per unit, we should have only used 14,500 square feet. 14,500 square feet. So we used 500 square feet more than anticipated. The whole reason for doing this is now understanding, okay, if I'm the manager, if I'm a production manager, if I'm an executive and I see that we overspent on material, I want to investigate why did we do so? And I could see the elements to that. I can see, oh, we spent $2.50 more per square foot of material. Then I could start to investigate why. Oh, why did we not buy as much as anticipated? Did our vendors' prices go up? Is this a commodity that's traded frequently and that price is just going up in the market? Did we pick a higher end material than anticipated? These are the things we start to investigate so we can make operating decisions going forward that either we stay with this course and adjust our estimates going forward, or we might see this is not sustainable. We can't keep overspending like this. We can't afford to spend $22.50 per square foot. Then I need to find a cheaper vendor, a cheaper material, buy bigger bulk items so I can get it closer to this $20 per square foot. These are the things, these are the kinds of decisions that can be made when we do this variance analysis, and breaking down this total material variance into these two components allows decision makers to start that investigation and be informed and therefore make the right decisions going forward.